All right. Tonight we're going to be working on kind of breakouts. We're going to call it wedge breakouts because that's the most common. Okay. So we're going to be working on wedge breakouts as kind of the title to this, mainly due to the fact that that's the most common of all the breakouts. But we're kind of using this as a prelude to next Saturday, not this Saturday, but next Saturday, the 14th, we're going to be doing a session on the wedge breakouts in much more detail. And part of that is going to be the other breakouts that we can identify using candlestick signals and being much more aggressive. So it's going to be a relatively short session. It's set up for an hour and a half, which probably means 2.5 hours. And it's going to be extremely expensive. Free for members and $27 for non-members. And the point of it will be that we're going to keep identifying, first of all, the signals and pattern setups that are going to make us identify or allow us to identify the breakout area with much more accuracy. So the rhetorical question, where do breakouts, where do they occur? We've got a major advantage by watching for new investor sentiment. So obviously, if we're doing a market analysis or trend analysis, we've got very simple parameters for telling us when a reversal is occurring. If we're using stochastics in the overbought condition and we see a sell signal, downtrend. Stochastics in the oversold area. Morning star signal, uptrend. Sell signal and a close below the T line, downtrend, bullish engulfing signal, back up above the 50. Stochastics in the oversold. Just makes it very simple to get in at the exact timing on a trade. Now, the major benefit, Don, this will be Saturday the 14th, and we're going to start it at an hour where even the people on the West Coast can get up at a reasonable hour. We're probably going to start it around 10:30 and maybe go right through lunch. All right, so what we're really looking for, what we have a major advantage of is using candlestick signals, is we can see exactly what's happening coming out of patterns and getting us into the right positions at the right time. And so wedge formations, dang, this thing does this every time. I'm doing something wrong. Yeah. Wedge formations allow us to prepare. Is that working? I can't tell. Okay, hold on for a second. Okay. Yeah, so they allow us to prepare because we're going to be able to see the support and resistance level, and we can see a trading range that's compressing. So that support and resistance level, something happens here that makes this difficult. Is that just the visuals allow us to see much more accurately when a wedge formation is compressing to the point where without the wedge formation, we can see buy signals occurring here. Now we know what will really confirm a wedge breakout, seeing it come out of this level. So if we can see once again that it's supporting on the support level, and we're buying, and we know we have a wedge compressing, we've got a much more compelling reason to start buying in here with the expectation. So we've got the advantage of knowing that we can see a wedge setting up, and then we can see the buy signal. So we can be buying in here and or buying right here based upon the confirmation of those signals. So just the fact that we can see, this thing is just driving me to drink. Now it's frozen up completely. When we can start seeing this, we get prepared for either a breakout in this direction or a breakout in this direction. Which means we can be buying off the support with the anticipation that if it comes back up here and fails, or we're back out of the trade, but what we're looking for is that breakout. So the compression of the price range is what we're looking for, a little bit more volume. How's that? And we can identify, we don't need to identify, but everybody kind of identifies a declining wedge is obviously moving in this direction. An uptrending wedge is moving in this direction. Now, the direction of the wedge doesn't necessarily mean it's going to break out positive. It's the support level and the resistance level that we're looking for. So if we see a little doji and then it comes back down through this level, that tells us this wedge breakout is going to provide a very strong move one way or the other. So this is what we're looking for, that compression, and then looking for the level that it's going to break out one way or the other. Now, we know there's pattern expectations. So I often get asked, well, what should we do right here? Well, if we can start to see that there's a wedge setting up, that's a pretty good indication. You probably don't want to be long or short until you have a breakout one way or the other. So the advantage we have, again, with candlestick analysis is because it's a graphic depiction of human nature, it allows us to not only identify when things are great or have a very strong price move potential, it also identifies based upon seeing the signals at a resistance level and signals at a support level, that if we can anticipate that there's not any price movement, take your money and move to someplace else. We're looking for we don't want to be in here. We want to be in here knowing that this wedge breakout, and you add the fact that it did it right here at the 50-day moving average, enhances the probabilities that you're going to be in the right place at the right time. And that should be also augmented by the fact that not only in the right place at the right time, but the magnitude of the move is probably going to be substantial. Because that indecision is what allows the candlestick investor to take advantage of the next price move, whether the indecision is a wedge formation or whether it's a doji. Remember, a doji is a day of indecision. And because we can know, or we do know, what the high probability trade setups are, that if we're seeing a wedge and then we see a doji sitting right smack dab on the top of that breakout area, what do we know about a doji? We know it's going to move in the direction of how they open after a doji, which means if they open up positive, what does that tell us about the wedge resistance? It's not there anymore. You've got a high probability that you're going to move much higher. Now, what's this do for us? There's going to be other techniques that buy here, 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 here. We're buying right here because we know we have two advantages doing that. One, we're getting into a high probability strong price move early. And two, we're getting in early enough that if it fails, we're right back out with a very small loss. So this creates very simple, obvious entry points. So I know exactly where my entry and exit is. I can see this wedge setting up, and I'm buying right here, and I see it fail and back out. Then if I see it pull back and not support here at the bottom wedge support, that tells me this is the direction they're going to go. I want to be going short. Kind of a wedge, and then look at our best friend. Additional wedge breakout confirmation. What's our best friend tell us? There's a very strong investor sentiment to the upside. And what's it doing? It's breaking off the 50 or breaking through the 50, coming out of a wedge. This kind of alleviates that problem that most investors have. And when I say most investors, I had it before candlesticks came along. Is, boy, this stock's up 10, 12, 15, 20%. I don't know whether I want to be buying. I'm going to wait for it to pull back, blah, blah, blah. Nah, I can see that it's a best friend signal breaking out. I want to be buying. That's exactly what this whole visual setup is telling us, that the bulls have definitely taken control. I want to buy on the breakouts. If I wasn't buying down here, notice you had kind of a little kicker signal. Then we had a doji up here. When it gapped up through this level, we didn't have to hesitate. We knew we should be buying immediately because what did we have? Number one, a breakout of a wedge, and two, our best friend signal telling us we're probably heading much higher, which also tells us the wedge resistance level is not acting as resistance anymore. So if I'm in a wedge, what do I want to do? I don't want to be trading this range because it's not going to give us very much. I want to be looking for where is the breakout point. So I might, if I see this, look at how we had a shooting star failure and then started trading down. Where would I have a stop to enter a trade? Right here. If it came down through this level, what did it tell us about the bottom of our wedge? It wasn't holding anymore. That was the direction they were going to go. So everything we look at based upon a pattern, which is what everybody else is watching, with the enhanced visuals of what our signals or patterns are telling us, it gives us that much more probability that we're heading heading to a breakout. Jake, the pinball scan was apparently developed by Rick Sadler, who was one of my first Candlestick private training students. And that's a different scanning technique or a different trading technique, much more for the scalper. So I don't have the answer to that. So the benefit we have with candlestick analysis is it allows us to identify the signals as well as the potential breakout. Much easier visual confirmation that we're moving in the right direction. Notice on this one, we had a wedge type formation coming right back to the 50, had a little bullish signal or potential reversal and gap up through the resistance. That told us exactly what they were doing once they hit the resistance level and breaking out through that wedge formation. So this is what we're looking for, is the breakouts. And my rhetorical question always is, do we always get big, huge moves like this when we see a breakout occurring? The answer is obviously no. But what we do get is an extremely improved probability of being in these type of situations based upon the breakout that we can identify with the candlestick signals at a breakout level. So candlestick breakouts are numerous. I would say numerous. There's different things we can look for. A breakout, a little left-right combo, gap up through the resistance level. Why are we buying immediately? Because we can circumvent that worry that a stock is gapped up 5, 10, 30, 80%. And we're thinking, oh man, should we be buying something that's already moved that big? If we can identify the signal or the pattern that created that gap up, yes, we're much more confident of buying, knowing that this is what we should expect on the follow-through. Whether you're doing it on a bullish trend or a bearish kicker signal, what does that tell us about our uptrend? It's gone. Where do you think our next target should be? Here. We can see that it didn't hold there. Where's our next target? Right down here. So the patterns work just like a road map. We know exactly where a Frypan bottom should break out. We know where we would likely see the next target. So this is not rocket science. This is just identifying what everybody else, or what human nature does most of the time, what everybody else is watching. So where would I be buying if I wasn't buying down here anticipating a Frypan bottom? I'm buying right here at the breakout of that Frypan bottom because I know the expectation of this breakout of a Frypan bottom is a very strong price move. Or a bobble breakout, which is a more defined J-hook pattern. You can see how it came right up and failed at the 50. Even if you missed this move and you saw this setup, you knew exactly where to buy. When it started trading back up above the 50, doing a J-hook and the more defined bobble, which is a failure that we could see right at a major resistance level, a support on our T-line, and then the J-hook pattern coming back up through the resistance. What this imply? An extremely high probability there was going to be more upside, probably at least the same magnitude as this move, which puts us up into this area, meaning it could go all the way up here, fill in the gap. Or a kicker breakout. Notice the kicker signal. Dark candle, and then they gap it up and go the other direction, breaking out through the resistance area. This is implying lots of strength have come into this, or has come into this new trend. It allows us to identify visually where a breakout has finally occurred. All trends have waves to it. Look at our morning star signal on the Dow, big reversal. Look at our resistance area right here at the 50. And then it acts as support. What do we expect on this next move? Same as this right here. And I'll get to, when we go to live charts here in a minute, I'll get to why the analysis of the chart or the markets itself is very, very important as far as our positioning in our portfolio. Bobble breakout. In the overbought condition, remember, we're trying to buy signals in the oversold area. The patterns are usually going to be occurring in the overbought condition. We also want to use as much information as we can on a visual basis, that if we can see there's support right here and bullish confirmation with a breakout through the T-line, that tells us exactly what happened right here. We're watching what everybody else is deciding to do, which in this case, this is what they were waiting for, to see if it was going to support at the 50. We've got the visual advantage of seeing that well before everybody else starts coming in. We can see the channels that might be a resistance level. And then our best friend gap up through that level. We don't have to be hesitating. Are these scans available anywhere for the larger patterns? Jake, yes, our patterns are, or our signals anyways, are over on already built into or you can buy the all the formulas and just apply them to the thinkorswim scanning, which I should have put on here in the first place. Maybe I can still do that. But we've got quite a few of these signals already built into thinkorswim. What we call the top rank signals and patterns, like the best friend, the left-right combo, the belt hold, things that are very easily recognizable. Once you, buying them, we've already spent a lot of money developing those formulas for TOS. So when you buy them, you just download them, and now you have them forever for your scanning. And I meant, and maybe we will still do it, we might do an hour and a half for the members that are using thinkorswim. I think maybe this Saturday. I'll have to see what the schedule is. But if we do, I'll let everybody know in the chat room tomorrow. I've got the scans, the way I can find my scans in a process. Unfortunately, with thinkorswim, the process is fairly cumbersome. So the reason we're doing this kind of jam session is I'm going to show everybody how I do it, which may not be the simplest, and hopefully somebody else that's already using it can come up with a better method for getting right to the scans much quicker. But that's the whole point of maybe Saturday, doing an hour and a half, 2 hours this Saturday on how you get to your scans much easier in thinkorswim. Roy, TC2000, that's fairly simple. When I say it's fairly simple, I still use the old 2007 TC2000 because all my scans are already applied. I had to do them myself years ago, but they're already in there, so each day I just update them. But we can do, that's simple enough that we can do the scans here in the next week or so on a Tuesday or Wednesday night. It'll take less than an hour to kind of demonstrate it. Just remind me. D, when I do them, I can do them fairly quick because I can recognize each signal and pattern. And when we go to the live charts here in a minute, I'll show you what, these are the scans I've done so far tonight to find the different things I want to illustrate. And then out of that group, I'll be able to identify which ones I think are the strongest, which becomes the recommendations for the next day. But the important part of all this is I don't want everybody just to use my recommendations as their source of picks. If everybody learns how to do the simple scanning techniques, I just put out the picks that I identify that could be the best ones. Well, as you saw in today's recommendations, there was 5, 3 longs and 2 shorts. Well, the 3 longs didn't open confirming, so there was no long picks. The 2 shorts, only one of them executed. So if you were doing your own scans, the longs that look good, and we cultivate them down to the 3 that I chose, with those not opening correctly, if you'd done your own scans, you'd had another 3, 5, 7, 8 more charts that look good to look at to see if they were opening properly and confirming the signals. Jake, I know we've done all that. Now, I don't use them, but that's something that in the members chat room, if you ask, has anybody written up the formula for buying or for this or that? Somebody's probably got that formula already uh, in there or in their repertoire, and all they have to do is copy and paste it into the chat room, and you just copy it out. So anyways, this is what we're looking for, is the breakouts. So when you have a best friend breakout, that's a much easier identifiable time to be buying right on at the open. If we can see a resistance level, there's our bullish engulfing. There's what we call a T-line crunch. Notice how the T-line crunched right up into the resistance and then broke out. So these are all things that we can identify very easily to get into positions that other people would hesitate to get into, knowing exactly what should be happening based upon each individual candlestick signal and our T-line indicator telling us, yeah, they're pushing right through. This is what we call a crunch, where they've crunched up and broken through. So before we go to live charts, here's what we got. Okay, Jim's putting in the formulas for TC or not TC 2000 for Think or Swim. Becky, you want to put in the take it off here? I know Becky put the if you want to put the link in again, Becky. What time of day is it best to run the scanner? Anytime, Martin. Depending on, I will usually, because I can update the ones I'm using like within 30 seconds. As soon as I click on it, it updates. Takes 30 seconds. Now I can see which stocks are having the biggest price moves, and then I can go to those stocks and see whether I want to, if they're breaking out or if they're creating a best friend signal. CB, I've never run into that. Yeah, I've never run into that. Matter of fact, I do a lot of research using the patterns over the weekend, so it might be you. Yep. Okay, now let's do this. See if I can yes. Oh, maybe I have to make this chart. So this is where we take the information, a candlestick analysis, and kind of apply it to whatever we're trading. Now I'm long soybeans, and this happens to be the chart, because you can see what's happened here. There was our morning star signal. This is the daily chart. So candlestick analysis works just as effectively. So here's how I trade a commodity. I can see on a daily chart we've got, after this long downtrend in the oversold area, we've got a morning star signal confirmed today with a close above the T line, and now it's trading positive after hours. So I went long soybeans. Now this is why the visuals of candlestick analysis is relevant, because of the visual aspects. If we do this, And this is what I call convergence analysis, which is putting as much information into our evaluation. Look where this bottomed out. At about the same level it bottomed out over here, in the oversold area, with a candlestick morning star signal. Morning star signal is one of the 12 major signals. Down day, a day of indecision, and a bullish day that closes more than halfway up this candle. Now what are we looking for? Well, when I started buying yesterday, or this morning, what was my assumption? My assumption was that more than likely, see if I can get this big, it was going to come up here and at least test the T line. Look how far away we had moved from the T line. So we've moved away from the T line. We have a morning star signal. The bottom's bottomed out right on where it bottomed out before. And I'm buying on positive trading this morning. Where's our first likely target? The T line. What happens when it gets to the T line? We can see what the 10-minute chart is telling us and whether it's time to get back out of that trade. Well, in this case, it went right through, closed above the T line, so we're holding it. With the expectation, we can do whatever anybody else is doing. We can put Fibonacci retracement numbers on. We can see if it's going to come up to one of these moving averages. Okay, that was the wrong chart to start out on. This is why identifying what the overall market is telling us allows you to make two decisions. One, your portfolio allocation. If I'm watching something like this and this, I'm probably pretty heavily long. When I say pretty heavily long, if I've got 10 positions on, 8 of them might be long, 2 of them might be short. Because during any given trend, there's always going to be some shorts that are working, or if in a downtrend, there's always going to be some longs working. Out of 10,000 trading entities, and the simplicity of a candlestick scanning method, you're always going to have, if you're in a bullish market, you're going to have 7, 10, 12, 15, 20 good bullish charts. During that bullish market, if you scan for short positions, you're always going to find 3, 5, 7 that are good shorts. Now, why would you put shorts on in a bull market? Because if it happens to turn on you like this, you've got your bull or your bear positions working for you even better while you're trying to get out of some of your long positions. So here's the kind of the simple logic that you can use when you're analyzing what the market is doing. Which way is the market going right now? Can't really tell. First of all, we've had a big sell signal, gap down, did a doji, gap back up, did a doji, did kind of a hanging man. Stochastics are still heading down sideways. So if we're looking at this, obviously we can see we're in an uptrend because we're above the T line. Right now, we can't tell whether they're ready to bring it back up or whether they're ready to roll over. So what would we do as far as logical allocation in our portfolio? Well, if I've got 10 positions on, is that a small wedge? Not really. You need a lot more information to kind of indicate that it's a wedge. If I've got 10 positions on and I don't know which way this market's going, I might be 4 short, 6 long, 5, something like that, where I'm half and half. Now, because we can look at this chart and say, well, we really don't know which way it's going, we could do that in a matter of seconds. Same scenario on the NASDAQ. Can we really tell which way it's going? Well, it's still below the T line. We need more information. If it gaps up, well, that tells us we're back in an uptrend. If it starts trading lower, still tells us maybe we're not going down, we're just not going up. YM, is that a 10-minute chart? no, YM is the futures for trading the Dow. I don't know whether I can get the YM over F dot Y. Yeah, that's the Dow E-mini. So it's showing right now that the futures for the Dow is up at 29 points right now. Oh, the last chart we had, that was the Dow itself. This is the daily. So if you want to trade this, this is the 10-minute chart. Now, as you can see, the 10-minute chart looks exactly the same as a daily chart or a monthly chart or a 1-minute chart, depending on what time frame you want to trade. Okay. So this is what we're going to kind of be concentrating on in that 2-week session. We're going to figure out where the breakouts are likely to occur. You can see that we had buy signals. This was wow today. It broke out. And WCC, it broke out. Now, would we have known of this breakout? No, but now we can see we've probably got a breakout, especially if it starts moving positive. So it's not only identifying where a breakout might occur, but it's knowing what type of candlestick formations we should see once that breakout does occur. So what would we want to see tomorrow to tell us that this breakout of this level is in progress? I'd be ready to buy, especially if it came back up through the high of this or up today, because that would tell us this kicker type breakout through this level is the bullish sentiment is still in progress. So if we can identify the signals and patterns, now we're looking for breakout through resistance. That would give us a J-hook pattern on, this is one DTE or DTIL. Restoration hardware. You can see the little J-hook pattern. Where did it break out? When it gapped up through this level, we could see our Morningstar type signal. We could also identify the fact that it supported on the T-line. So when it opened positive and started trading up, what was it telling us? That this resistance level was not acting as resistance anymore. I'm going to try to go through these quickly because they're all kind of So where would I want to see this J-hook pattern break out? Probably somewhere up here. Now, we know a J-hook pattern is setting up. We know there was profit taking going into the close, and it did a shooting star Doji. We're kind of up here in the overbought area, but what do we know about the Doji rule? If it opens positive, it's likely going to trade positive. If you buy it, what's your next expectation to get through this level, giving us a J-hook pattern? So because we know what should happen after a candlestick signal or pattern, it allows us, well, I don't know why that's not coming up. There was our J-hook pattern in pause. When it came up through this level, what did it tell us? It was confirming our J-hook pattern, wave 1, wave 3. If I was long, I wouldn't want to see it come back down through today's low, which wasn't that far away. But if it started trading in this direction, after a shooting star in the overbought area, what's it telling us? It told us that this level was a resistance level. You probably want to close out the trade. So that's kind of alluding to the fact that not only are you able to recognize when to be buying, because we know what should happen based upon signals and patterns, we also know where we should set our stops with much more accuracy, telling us there's been a change of investor sentiment. Now we've got a J-hook pattern on Prego. And this is one of our strongest reversal signals. This is what we call a bullish flutter kicker signal. Notice that it opened here and closed here. The next day, meaning yesterday, it opened above where it opened the previous day and traded higher, but it did a Doji day. But what was the information that we already got from this trading day, even though it was indecisive? They gapped it up above the previous day's open. That's a gap situation. Now what do we know as far as our next common sense analysis of what should happen after a Doji? We know if it opens positive, it's likely to trade positive. That gives us what we call bullish flutter kicker signal. What's our strongest individual candlestick signal? The kicker signal. Why do we call this a flutter kicker signal? Because if you took this little flutter out of here, which was setting you up or telling you to get ready, you take that out of here and you basically have a kicker signal. Now look where you are. J-hook pattern, started with a bullish flutter kicker right at a resistance level. What do you want to be doing? If this opens positive and starts trading above the 50, you want to be buying immediately. Okay, I've got a few here. I don't know why they're here. There's kind of your slow curve, looking for a breakout of this level, or at least bullish confirmation. There was our J-hook pattern, breaking out through this level with a gap up. Now this is where knowing a lot of people are told stay away from gaps because you don't know what they're doing. That's what most money managers tell people. The problem is a gap after a candlestick signal is your best trading format, because not only did this tell you there's a reversal, they're heading up. When they gapped it up, that's confirming that signal that much better. And what do we want to see? We want to see candlestick signals followed by gaps, because that tells you they not only have reversed the trend, but they're definitely confirming it by everybody getting in as quick as possible, gapping the price up. So there's your bullish flutter kicker signal. I'd be a buyer of this with the anticipation that if it gets through this level, there's your next target, and filling the gap is your next target. The important aspect is, with a bullish flutter kicker, which way it's going. Now you have the luxury of seeing what's happening at each one of the targets that everybody else would be watching. So there's your kicker signal. Today, did a Doji. That's not a kicker signal. It is a kicker signal. This candle was a little bit bigger on the other charts, and then it gapped up. So what does that tell us if it starts trading positive? It's going through this level with a best friend gap up. Now, that must have been a kicker signal. I'm going to do this. This is correct, but this was a little bit bigger dark candle on the other charts. So what do we know about the strength of this move? Pretty strong. What did we see today? Profit taking after a strong price move. If it opens positive, what's the logic of that? Tells us the profit taking's over. The force of this move is still in progress. Okay, so there's Same scenario right here. What do we got going on? We've got kind of a piercing signal, but you can see where it's supported. Here is things that if you know what normal investor sentiment does, and then you can see it much more clearly using the candlestick graphics. Look what happens when it goes up through a resistance level. They'll come back and test it to see if that resistance is going to act as support. If it acts as support, what's that tell you? Everybody's confidence is still there. You ready to buy this one on positive trading because everybody was confident it was holding. Now you got a J-hook pattern potential. So if this was wave 1, wave 3 should take you up into the $10 range. No, it's not a bullish flutter kicker. It's just a best friend signal, kind of a Doji hammer gap up coming out of the oversold area. So best friend is still, the reason we call it your best friend is because it does represent not only a high probability you'll be in an uptrend, but a very strong uptrend. So this is why recognizing the patterns allows you to be put into positions where the probabilities of being in a big price move is much greater. Look at your Frypan bottom. Look where it broke out, right about in here. I'll make this bigger again. So when it broke out here, remember, we're buying the signals when you're in the oversold area. A pattern breakout is usually going to occur when your stochastics are up here in the overbought area. Yep, so it didn't matter why it went up here. We could see that investor sentiment was building up. There'll be a lot of times when our pattern's setting up. Well, we don't have the resources or the insights of knowing why that price is moving like it is. All we know is this is what investor sentiment is telling us, that it's got the potential of moving much higher. PDCO, another one that was setting up as a Frypan bottom. There was your left-right combo. There was your breakout. There was your big price move. Again, this is more of an illustration to show that investor sentiment works the same way time after time. Look at where your Frypan bottom breakout occurred. And what's our expectation on the Frypan bottom breakout? A very strong price move. The blue is your 50-day simple moving average. The red is your 200-day simple moving average. I think this is the 34 EMA, which is a kind of a minor support and resistance level, but it works effectively. And yes, it's too late to buy. So when asking that question, yes, it's too late to buy because you're not trying to buy up here. You're trying to buy when it's effective to get this type of price move. And so I'm only pointing that out is because everybody asks that question, is it too late to buy? And if you're looking at something where you think it might be too late to buy, your education process should be, where should I have been buying? What pattern was setting up? So most people are saying, oh man, I'm missing this. I need to get in it. Remember, there's 10,000 trading entities out there. 7,800 of them are stocks. On any given day, you're going to be able to find something that looks like this. This is where you want to be buying for two reasons. Your upside potential is great, and your risk reward is that if it fails here, you're out with a small loss. If you get in up here, what's everything going against you? You're in an overbought condition. You've moved a good distance away from the T-line. You're already up 25%. This is now a hold. This is now looking for when is it time to sell. TSEM. So this has the same scenario. This one I'd be more apt to be buying because look how it's gapping up. Remember, your gap is telling you there's a lot of strength coming in. Got kind of a Frypan bottom. I'd be more apt to buy something like this because you're not in an over exuberant trading area. Oh boy, let's see. Right here. Yeah, well, we call this kind of a trend. Let's see. No, that's not the kicker. 18th. Right in here. No, that's your hammer. 18th. No, not a real. Red hammer. Yes, that's a hammer signal. Now, what do we want to see after a hammer signal? Bullish confirmation. So I might not be buying on this day or this day, but I'm definitely buying on this day because what's it telling us? They're staying above the T line and your upward trajectory is starting. What I usually tell people, or what I've been kind of pushing on people here recently, is there's about 18 top rank signals and patterns. So you definitely want to learn them, but a lot of people say, well, no, there's so much to learn. My recommendation is you pick out 3, 4, 5 and learn them very well. Now, even with 3, 4, or 5 that you're learning very well, you're going to always have more trades than you can handle. And when you have more trades than what you can handle, you now have the benefit of taking a look at the ones let's say you scan and you find 7 great trades. Now you've got the luxury of going back and going through those 7 trades or trade setups, saying, all right, let's cultivate this and see which ones are the best 1 or 2 that I might want to go after tomorrow. So here's one method. Look at the support. Look at the bullish Harami right on the 50, bullish confirmation. What can we expect from there just from that logical analysis? The Candlestick's coming back up, support right on the 50, and I didn't finish, did I? As far as the 200, the 50. Now the reason we have the 200 and the 50 on our charts is because every major money manager around the world has the 50 and the 200 on their charts, and that's where they make their decisions on what they're going to do with a trade in their portfolio. We can see exactly what their decisions are based upon the candlestick chart. The T line is the 8 exponential moving average. Again, Rick Sadler, who has the hit and run, has developed hit and run on scalping with candlesticks, came up, called me after he got back up to Anchorage after we did a 3-day private training session in Houston, and he loved candlesticks, and he said, take a look at the 8 exponential moving average. Look at the probabilities of this acting as a support and resistance level. And basically, he came up with the fact that if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. So, convergence analysis. A bounce off the 50 with a bullish Harami. And what's a bullish Harami tell us? The selling has stopped. What's the gap up the next day tell us? They're now buying. What's the close above the T line tell us? That's additional confirmation that the bulls have taken control. So what do we want to do on this one? We want to be buying on positive trading, factoring wave 1, wave 2, now going into wave 3. So here's one method of trading. That if you see something come back to a support level, you can start buying. This is Nordic today. Notice how they started buying. Little Dojis, let's make this bigger. Little Doji type days right off the 50, gap up. Where did it do it? Right smack dab off the 50. So what's that kind of imply? Consolidation's over, now looking for the next move to the upside. So I think this one, no. Whoops, I went one level too far. Look at your Morningstar signal with a booster right off the 50. What do we got going on? Wave 1, wave 2, Morningstar, scoop type pattern. Look for wave 3, high probabilities it's continuing higher. Crocs, support with a piercing signal, right smack dab off the 50. So just logically, if we can immediately see what everybody else is doing at a major moving average and it actually creates a signal, this is our expectation. That everybody, notice again, they came up through a resistance level, pulled back to the resistance to see if it's going to act as support. The fact that they did a bullish harami right on this level, what did it tell us? The selling had stopped. Get ready to start buying. Just identifying the high probability trade setups. Now, is every one of them going to work? Obviously not. But the probabilities are dramatically in your favor that if you're buying based on a buy signal, Morningstar signal right off the 50, that you're probably heading higher. MHR, well. Because I typed it wrong. MHK. Right here on the 50 and the 200, closed right at the T line. What would be a very high probability entry strategy tomorrow? If it opens positive, it's confirming our buy signals right here off the moving averages and telling us the T line, which is acting as a downward resistance level, is not acting as a resistance. It's time to start buying. And it makes it very simple. If it opens positive, the probabilities are it's going in this direction. So you're buying immediately with this expectation. And also, if you're buying on positive trading, the market looks like it's trading up. This is opening higher. But at the end of the day, it closes right here. You back out with a small loss and you go on to something else. And probably can be had with all these good leads, but which to implement. CB, that's part of our cultivation process. That's why you want to pick 3 or 4 to become an expert at. I'm showing you a bunch of different things because candlestick analysis is the graphics, a very easy method for identifying what your strong signals might be, like a best friend breakout. What do we expect afterwards? A 45-degree. That might be the ones you want to become an expert at. Or a wave 1, kind of a wave 2, going into wave 3 on a J-hook pattern. Again, look at your Morningstar type signal that started your uptrend. Look at your Doji sandwich right here that told you there was going to be more upside. So these little facets are much more compelling for analyzing a price move versus any other trading technique that you might come across out there. Or if you've got somebody that's giving you good trading situations, Hubert or Steve Primo, whatever trading program you're using, if you overlay candlesticks on it, it will be much more clear of what they're doing. The 3 little green line is what we call the 3T line, which becomes much more effective the further away you move from the T line. And it also acts as an additional confirmation that if the 3T line starts crossing up through the T line after a candlestick buy signal, it's confirming the bulls have taken control. Yes, we call it the 3T line because it's the 3 EMA. Resi, bullish engulfing, bullish Doji sandwich. Whoops. What do we expect from here? It's broken out, first target, and then see if it can get through that level. But it's given us a good, strong buy signal. If we recognize specific patterns, like a little scoop pattern, that if this starts trading up above this level, notice our little morning star signal acts as a scoop pattern. What do we expect out of a scoop pattern? That slingshot effect, making wave 1, wave 2, going into wave 3. So what do we do to confirm? Might put a buy stop right there. If it came up through that level, that told you they were confirming that that pattern. We're in SE. There's your scoop pattern. What do we do on this one? It came up through today's high. Notice our Doji sandwich after a piercing signal, kind of a scoop pattern. Get ready for a slingshot effect to the upside. Ron, yes, I'll get to the short positions. I'm trying to get through just kind of illustrating how the graphics kind of give you pattern setups that are high probabilities. That's Simco. This is Mattel. There's your little scoop type pattern. If it came up through this level, told you you've got good probability of a slingshot effect to the upside. Also, the candlestick signals tell you when to start getting ready to sell. You can see how this works. Going into a strong price move. If you held on to this, what do you have? You've got a shooting star in the overbought condition. Now you've got a hanging man. So what's your sell technique? If this opened lower tomorrow, you close out the position, because what confirms a hanging man? Lower trading. What's telling us that the bears might be taking control? A shooting star, hanging man in the overbought area. 2 of the 12 major signals. Now, would we have gotten out here? Well, if you're using the very easy technique of look how far away you are from the T-line up here. That's a good fur piece away from the T-line. What do we know about the T-line? The further away you move from the T-line, the higher the probability it's going to come back and test it. So what's our technique for taking profits when it's trading up here? We simply go to our 10-minute chart. Let me see if I can. So here is probably that move. I think. So this went up to 9.5. Let me see if I can do this. Where was it? Oh, yes. So there's your move. Now, look where it is on your 10-minute chart up here. Where are you on your daily chart? Way up above the T-line. So when do you start taking profits? Now you've had a kind of a shooting star, hanging man, a close below the T-line. Now you start taking profits because the 10-minute chart is telling you the selling has come in. And that is a good indication that if they're starting to sell below the 10-minute chart, you want to get out of the trade because you already have the alert that you're that far away from the T-line. You want to start getting ready to take profit. What's the worst case scenario? It comes down. You can always buy back. But when you're up this far away from the T-line, human nature, or the T-line acts like a natural support and resistance level of human nature. Just gives you a little bit more alert of when to start taking profit. Same scenario. We've been long because of the slow curve, breakout. Staying long. What was our alert? Japanese race traders tell us where do most people buy? They buy exuberantly at the top. If you see a gap up in the overbought condition, what's the first thing you want to start doing? Start looking for profit taking. So we closed out half the position here. We closed out the other half here. Where do you think it's going back to? At least back to the T-line. What was our alert before these sell signals formed? The fact that they gapped it up in the overbought area. Reggie. Reggie was a good breakout. So there's two things you can do when you're up here in the overbought area. You put your safety stop right here. Because logic says if this is breaking out, like it should be, it shouldn't be coming back through this level. Because if it comes back through this level, where do you think it's going to? Right back here to the T-line. If you didn't close it out because you're waiting to see what it does at the T-line, now you know what your strategy has to be from this point. It has to open positive and trade positive to stay in it. If it opens lower, close it out. That's kind of destroyed the trajectory of the pattern that you were getting into in the first place, the Frypan bottom breakout. There's kind of a wedge on this one, on work. So what do you want to do on this one? See whether it's going to break out through this direction or through this direction. But when you see that wedge starting to narrow down, now you can put it on your watch list and wait to see what it does. So because candlestick analysis allows us to get in at the appropriate time, it also tells us when to be out of a trade. So big breakout, then a doji that supported on the T-line and came back up. What do we know about the doji? It's going to move in the direction how they open after a doji. So where would you put your safety stop? Right here at the low of that doji. Because logic says if it comes down through there, who's in control? The bears are still in control. I get a lot of people say, well, I had somebody tell me that I should get out if a price moves 3%, 5%, 8% against you. And the answer to that is the market doesn't give a hoot where you bought. If you're buying on a basis of the bulls taking control, you want to find a place where the bears are taking control. So what was the logical stop for this trade? Well, what was the alert that we might start watching for profit taking? Look at your gap up in the overbought area. Then they couldn't take it up. Doji, doji, doji. Where would be a logical place to put a stop? Probably somewhere right in here. Because if they didn't take it this way and they came down through the bottom of all these dojis, they were taking it this way. You should be out of the position. Yes. Remember, if one doji means indecision, a series of dojis means greater indecision. We want to see which way they are planning to take that decision. On workday, would the fact that it just closed above the T-line, would that hint that it's going to break out of a wedge to the upside on workday? Or maybe work? Oh, on work. Okay. Yeah, that was the wedge setup. On workday, would the fact that it just closed above the T-line, would that hint that it's going to break out of the wedge to the upside? Not necessarily, but it's giving you that implication because there's your big hammer signal. Here's your resistance level. There was your wedge. That's kind of saying, all right, I want to watch this because they knocked it down and did a hammer signal. The Stochastics, even though, remember where things usually break out when you're in the overbought condition? That's just, a little bit more of an alert to say, all right, let's watch to see if they can break it out. Not necessarily because they closed it above the T-line, but the fact that they did a big hammer signal, knocking it down, then the bulls took control, and they came up through the T-line and the 50. That should be something that that's why we've got it on the watch list right now. It's because there was a lot of bullish strength, and we're getting near the breakout level. Your best friend. Look what happened down here. Doji gap up. What was your additional confirmation or, I want to say, implication that the bulls were in control or getting into control? Look how they did a lot of doji sitting right here on the 50 and then did a best friend gap up. What'd that tell you? There's lots of indecision right here at the 50, and now they told you with great force what they've done with that decision. SPWH, there's your little inverted hammer doji gap up. Where did it gap up? Kind of through this resistance level. What do you want to do on this one? You can definitely be buying this one because of the breakout with a best friend signal on positive trading tomorrow. I started buying some calls on this one. They were hard to get, but look what you had. You had your best friend breakout of this resistance level. What can we kind of expect with that strength? Maybe another move of this magnitude. So what's my risk reward? I think I bought the December 90s for 80 cents. So what's my risk reward? Well, if it fizzles in here and I get out at 40 cents, all right, lost some money. If it does do what we kind of expect it to do, move up 15 points, that takes that 80 cents up to 15, would it be $15? Yeah, close to $15. So I've got a 40-cent kind of calculated risk if it doesn't work, and an upside of $15 if it does work. So this is why we're looking for the force of our signal or patterns to give us the place to be in the right place at the right time. Yes, kind of a little scoop pattern also. Gary, because I expect this to, because of the strength right now, I bought the Decembers, which they only had the monthlies. Now, there's lots of weekly options out there. This only had the December. That's 2 weeks away. So I'm anticipating with the strength of this move that in 2 weeks we could be much higher. And that also is a function of each individual's risk reward of how aggressive they want to be. Now notice this best friend signal on Genco. This is what we're kind of expecting. So on this given day or on this day, I might be buying calls with the expectation it was going to move a lot higher. DB, let me finish up. Oh, still want to get to some of the shorts. There's a little J-hook pattern on Planet Fitness. But notice this is what we call the message. Notice the big gap up move, and then it traded south. Doesn't look very good. But what you have to remember was the message was they up. Now there's profit taking. So what do we look for? We look for when the profit taking's over based upon candlestick signals and start getting in then. Because the message was there was a strong buying force coming in. Now, we've bought puts on Beyond Meat. Now, couldn't do it here, couldn't do it here, couldn't do it here, but over here, look what happened. Let's make this bigger. Look at our evening star signal and a close back below the T-line. And then they gapped it down. So how long would we stay short on this one? As long as we don't see it close back up above the T-line. So this has dropped pretty much. So what should be the analysis of investor sentiment? Dang, I hate when it does. I know I don't hit that thing. Well, we can see, I could even make this bigger. It started at $240 up here. And for the last 6 months, it's been in a downtrend. But notice what the T line has been doing in this downtrend. It's been acting as a resistance level. So now, what can we assume investor sentiment is telling us? Oh, it came back up to the T line area again and did another sell signal. Investor sentiment still heading lower. The spread on AX calls seems large. It is, Jim. So today I had when you're looking at calls and you can see that big spread, that means there's probably not a lot of liquidity in it. So I bought them eventually at the end of the day, which I usually don't do, right at the ask price because of the possibility that AXE could gap up tomorrow another 6, 8, 10, 12 points or move up that because of the strength. So I had to look at it as I paid 80 cents for them. What's my upside potential? I'm looking for it to go to some big number. What's my downside risk? And if it doesn't work, maybe I lay my options out there at 40 cents and see if somebody hits them. So I bought puts on this one with the expectation that it couldn't, it was trading back down through this level. And now if it opens lower tomorrow, what type of signal do we have? We've got a bearish Doji sandwich. And what can we expect from a bearish Doji sandwich? More downside. So the shorts, there's an evening star signal on fold. If this opens lower tomorrow, what's your next target expectation? Back down to the 200. Oh, we did work. Did I work over here? Why do I have work over here? It's from a, I don't know why. Clovis. Again, get rid of all of these. Look what we had up here. There was our Doji gap down, back through the 200, closed below the T line, and now it did kind of a Doji sandwich. Where do you think your next likely target could be? Back down to the 50. Because not only do you have an evening star, this would, remember, our McMuffin is a morning star signal followed by a Doji sandwich, or your Doji or your morning sandwich. Now you've got the opposite, an evening star signal followed by a bearish Doji sandwich. Look for more downside. And PBYI, a bearish engulfing signal. What should be happening right here? We should have a Frypan bottom breakout. So what happens? We have a bearish engulfing signal. What did that tell us about our breakout? It didn't occur. Now it's selling off. This could be a short. Homer, Doji gap down. I'd be shorting this one on any weakness from here. Because if it comes down through this level, wave 1, wave 2, wave 3 down in this range. So again, this is not rocket science. This is just identifying the patterns that are created by human nature over and over based upon investor sentiment. There's your Doji gap down. You can be shorting this one on weakness. What do you want to watch? To make sure it can get down through the 200. But the fact that you had a bearish best trend tells you there's a lot of force to the downside. Try to read whoever's handwriting this is. There's your rollover. Doji gap down. Next target. Notice your gap down. They tried to come back up, but they sold it off again today. Still probably some more downside. Ron, remember what the candlestick signals and charts tell you. They tell you what's going on in investor sentiment during any particular time frame. They work just as effectively on the 1-minute chart as they do on the monthly chart. However, the investor sentiment at the end of the day on your 10-minute chart will have absolutely nothing to do with what your investor sentiment is 14 hours from now when the market opens up, or 12 hours from now when the market opens up again. So at the end of the day, your intraday charts now become null and void. Labu, no. Labu is a non-sell signal, and it's still trading above the T-line. So what's that ultimate analysis? No sell signal, and you're trading above the T-line. You still have to assume that you're still in an uptrend. And grub, you can see what's happening here. This time it failed at the 34. You can start shorting this. Where do you think your next target should be? Back down to this level. And then possibly a move the same magnitude as this, bringing you down into this area. That's right. Thank you. C. Martin, the reason I like showing people the simplicity and the logic built into candlestick analysis is because before I discovered candlesticks way back in the mid-'80s, I was the worst investor in the world. I was even a stockbroker for 8 years. Got out of the business because I realized the brokerage firms had no more idea what made prices go up or down than anybody else. When I started looking at candlesticks, the one thing that kept hitting me constantly when I was doing candlestick analysis was, this makes sense. And the more I studied it, the more sense it made. Look at your bearish engulfing signal. You're in a downtrend. They pop it back up. There's your best friend signal. Where's your first target? See what happens at the 50. A bearish engulfing signal. So you're in a downtrend. Let me see if I can make this smaller. You're in a downtrend, and it comes up to a resistance level in the overbought area and does a sell signal. What do you think the prospects are for investor sentiment? They're still in a downtrend. If it opens lower, you can start shorting this one. And we recommended NTVA based upon the dark cloud and then the close back below the T-line, and it also was in a downtrend. So where do you think the next likely target is going to be? There's your first target. There's your second target. Now, will it get there? That's the projection. So that's where they usually move to. However, what is your final criteria for covering a short position? It comes down here and you see a buy signal. By that time, the stochastics have gotten to the oversold area. Close out the position. That's right. The signal trumps the target. Okay, so we're going to be looking at breakout situations Wednesday. No, why did I say Wednesday? Saturday the 14th. Again, it's probably going to be, it's advertised as an hour-and-a-half session. As many of you have found out that our projection of how long it's going to last usually is way understated. So figure on at least a couple hours of analyzing where the breakouts occur, why they occur, and what signals or patterns will allow you to recognize when it's about to occur. Okay, that's about all I got tonight. Oh, YS, probably the next 2-day training probably won't be until maybe March or so. Becky, can you put the link in for the, there you go. All right, let's go back to this, the Dow. You can easily analyze when it's time to buy. You can analyze when it's time to sell. And then you can analyze when you don't know which way it's going. There's still enough bullish and bearish charts out there that if you have 10 positions on, maybe you have 5 longs and 5 shorts. So as we can see, there is enough short positions every single day to be able to go one way or the other, or have short positions on in an uptrending market or having long positions on in a downtrending market. Because even though the uptrending market might be in place, there's probably going to be some that are selling off that you'll still make money with the shorts, even in an uptrending market. Okay, it kept us way over time. Hokey smoky. All right, everybody. We will see you bright and early in the chat rooms tomorrow. We'll see you then.